Hello and welcome back, guys. It's a Monday morning, or Monday afternoon, or Monday evening, depending when you watch this. And we have a lot to talk about. We have everything from a Litecoin potentially busting. People are talking about $100 Litecoin. And also, we're going to kick off finding out what money was moved in and out by institutions last week. And is this going to give us some indication? Because at the moment, we're looking at Grayscale Bitcoin Trust potentially going bust, and also some big news from the Fed later this week. So I'm not going to hang about really. I think what we should do is just get straight into this. We'll have a look at this news here and see exactly what we want to be looking at for this week. Just a quick recap. Oh, and also can't forget the FTX scandal gets worse. It gets a lot worse, guys. Where's the money? I don't know. I don't know. Well, let's start by looking at what happened last week with money. So, as you can see, these are the different investment vehicles that companies can use to put money in and also take money out of crypto. These are the coins which we saw weekly investment flows in and out to. There's not really enough, there's nothing to talk about, to be honest. It's quite disappointing. I think we might see a change with Litecoin this week, just because, those people who are investing are looking for some stability. We'll cover that in a second. And the reason why I'm not excited about this Bitcoin $14 million in is because there's also $18 million into shorting Bitcoin. Very much just like a hedge fund covering off or hedging their bets against, going long. Also, they need to go short. They need to short Bitcoin to hedge their bets. Overall, nothing really very fancy. As you see, a tiny bit of money in, but we're going into short Bitcoin. So, is that money in? Not really, as far as we're concerned. This doesn't give us a long sentiment, i.e., a sentiment that people are actually going long. Multi-asset, though, I think we are beginning to see this buy the dip mentality, which is quite crucial, and I'm pretty happy with that. And as you can see, Canada 9.5 out. I think that's because they FTX was one of the investments of Canada's third largest pension fund. So they were probably like, right, guys, we messed up here. Let's take any money out of any pension funds. And which, to be honest, if you're looking at a pension fund, probably crypto is not really a great idea. Everyone always says when you're younger, take lots of risk, not financial advice. But you learn this when you go through it, and I've done this, is as you're learning to be a financial advisor, you go through, basically lots of risk initially, and then you tailor off the risk. And at the end, once you've made loads of money at the end of your life, you're in bonds and a bit of stocks, very safe stuff, maybe some metals and stuff. So yeah, we can kind of see why that's happening. Switzerland buying the dip, and also the US as well. Now, talking about Litecoin, boring Litecoin makes a play for top 10 amid market meltdown. So guys, I have actually said previously that if you look at each cycle of the market, most of the top 10 or most of the top 20 is not the same through each cycle. Obviously, you got likes of Bitcoin that is. But aside from that, we had like Solana jump onto the scene. We've seen loads of different coins come and now consequently go. And I think we are seeing that beginning of the transition. So we need to be finding some of these chains that are slowly climbing up into the rankings, while everyone else is kind of falling to the downside. But the overall sentiment here is that people are looking for stability, of which Litecoin has kind of, given people a little bit of that. The MD of Litecoin Foundation, Alan Austin, thinks so. He said last week, are you not entertained? I don't know if he could say that, maybe copyright, but anyway, I prefer him saying that. Similarly, as the SEC securities controversy play out, maximalist Michael Saylor recently stated that Litecoin is likely a commodity. Now, if you're worried about the SEC coming in, swooping your bag, killing your coin, then, you're going to want to go for the CFTC, i.e. the governing body of commodities, instead of securities. Because, I think it was the head of the CFTC said, look, guys, we think Bitcoin and Ethereum, etc., are commodities, and they get taxed in a different way. They get governed in a very different way. And the people who do govern them seem to be much more friendly. So this is, again, something that kind of gives us another element as to why Litecoin might begin to see a pump, especially this week as this news hits the papers, hits the headlines, should we say. So LTC wallets are on track to outnumber Ethereum wallets, which is actually pretty crazy. having a look at this. Sorry, I got my dog here trying to play fetch with me. Not a great time at the moment. So as you can see that the number of total addresses is going up. We kind of hit this inversion point of, price coming down, not necessarily relevant. But as the price comes down, there is this correlation of addresses going up. And it's been on a very, very steady move for an awfully long time now, which is actually a really positive thing. But then also you can see the number of addresses from Ethereum kind of sitting around about this, 165 mil, maybe 160. Okay, well, I don't know why am I speculating? Currently the figure is 166. Let me see if they do that up here. Let's have a look. Currently around 162 million Litecoin wallets, which is a bit of a weird one because everyone knows, and fancies Ethereum. Maybe Litecoin, we've just been sleeping on it and could be a very good time to get involved. Looking at this TA just from one website, business to crypto, business to community, whatever. They're looking at different price targets of here, and here. I just went on very briefly, and AJ's messed up with this, so I can't draw on these lines. Now they just extend forever. So I didn't have time to kind of properly go through and do it, but you can see this kind of, what is this, like an ascending, I believe it's an ascending triangle, exactly. So I wanted to bring it up here so you could see the very simple way as to how it plays out and what we're currently looking at here. We are following that same pattern. Big move to the downside, a bit of recovery, and we will bounce around here. I believe we will bounce around here. Obviously, this is not valid yet. We're waiting for that breakout. We have to obviously see a breakout, see a retest, and then push to the upside. But obviously, with everything that's going on right now with Bitcoin and Ethereum, and all the prices are just dropping, it's unsure. But this does seem like a relatively good safe haven if you're looking for a coin that could potentially flip quite quickly and begin to gain, not just popularity, but also just gain a lot of traction, and then therefore everyone wants to buy it while the market is going down. This doesn't seem like a bad idea. Now, speaking of markets that are going down, FTX owes its 50 biggest unsecured creditors, people who've given them money, more than $3 billion. Now, from these top 50, the top one, FTX owes them 226 million, and the smallest one of the 50, FTX owes them 21 million. So it's really not looking good. And all of them were listed as customers, and 10 have claims of more than 100 million each, which is mental. And I do want to mention this whole claims thing. Celsius bankruptcy victims get proof of claim deadline. So you will have to go through this as an FTX, investor if you are invested into FTX. And so let me just throw this up here. Thank you, Crypto Invest. Good to see you all here. So you will go through this process, and we're going to see as more and more people capitulate and they start losing money from the markets. We are going to have more and more people, go through these legal loopholes, which is not necessarily a bad thing. But I will just show you this interview. And I've got to put it on my phone, guys, because, I've tried before and it just doesn't work. So let's go and have a look at this. Oh, mate, am I looking at an advert? Hang on, guys. Hang on. I've ruined it. I've ruined it. Oh, here we go. Here we go.
Sam Bankman-Fried's empire are struggling to find missing funds. They cite poor internal controls and record keeping. I mean, this was not a good report. Bloomberg's Shai Bassick joins us now. How much of the funds can they not locate? Do we think that it was all in tokens that are now worth zero? Any hints on what it might be?
I think if you look at the declaration by John J. Ray, remember, this is the man who oversaw the liquidation of the Enron bankruptcy as well to try to recoup funds. He had very strong language. He said that there was complete failure of corporate controls. And he also cited concentration of control in the hands of a small group of people. Tracy Alloway of Bloomberg also pointed out some really interesting details in the footnotes of this filing that showed you loans that went from Alameda had gone to certain individuals, and certain amounts of this money was used to pay, according to this filing and the declaration from John Ray, to pay for personal assets of Sam Bankman-Fried as well as his deputies. So it is definitely worth a read, this filing. But remember, this is his account. If you want Sam Bankman-Fried's account, currently. You can go to Twitter. He has his own account of what had happened with assets and liabilities and what had happened to the tokens in between.
Are those Twitter posts going to be a problem, do you think, Shanali? Because there's a lot of noise around this story. And in terms of the legal process, I'm wondering, and this is being raised as an issue, whether or not they actually could confuse matters further.
Yeah, the lawyers for FTX have been accusing Sam Bankman-Fried of undermining the bankruptcy process. Remember, there's been a lot of reporting.
We're going to just leave that there, but you can head over to Bloomberg. This is a free interview that you can see. So I wanted to bring this to you guys because obviously, like, you know, apparently you're not just allowed to take company deposits from your customers and buy yourself personal assets. That seems crazy. I don't know why you're not allowed to go buy a mansion with someone else's $100 million deposit. I'm not sure. But obviously this is a massive, you know, it's just it's a shit show, really, and that's the only way to put it. It's really not good. Obviously, Sam Bankman-Fried is now looking at legal problems as well, i.e., going to jail. And his whole like account of what's going on. You know, he did this whole like what HAPP in each different tweets. I think this was because, and I think could be wrong, he wanted to keep the number of tweets on his overall profile the same, but while secretly going in and deleting certain posts. And we've seen that he's done this, you know, things that directly incriminate him to having known exactly what was going on at the time. But anyway, I'm going to move on from this. Just another thing we're looking at this week. Maybe it's more prudent to show you this FOMC minutes. I think we're going to get another summary of economic projections, which is this thing that I've shown you before. So it's from the Fed. I know it says Fred. I know it says Fred, right? This is the St. Louis Fed. I don't know what this Fred means. Maybe I just don't know anything. Yeah, it says Fred, but this is the summary of economic projections, and these are released by the St. Louis Fed or St. Louis, whatever. Federal funds rate 4.4. This is what we were anticipating, but now, and I'll show you the chart by St. Louis Fed President James Bullard, this guy, who kind of made those. As part of a presentation, he has said he put the zone somewhere between 5 to 7% because it has to be the sufficiently restrictive zone. So he's now saying Fed funds rate could go up to 5 to 7%, you know, far above and beyond where they currently are, as you see, at 4% as the upper limit, 3.75 for the lower limit. So this is something to kind of keep into consideration, guys. You know, we are seeing, we are seeing this massive kind of bearish sentiment from the Fed. As soon as the markets do get a bit excited, you know, the Fed always make sure to kind of step in and say, wait, hang on a sec, you know, let's not get too excited here, because we don't want to go into, you know, getting everybody excited. And another kind of situation of this, man, I'm gonna have to get rid of my little dog. See you later, mate. He's trying to play fetch, and I'm like, hang on a sec, you know, give me 10 minutes. Anyway, Grayscale, they cite security concerns for withholding on-chain proof of reserves. So basically, they just said, look, we're just not going to show you our data. We have money, but I'm not going to show you that I have money. And wait, what? Binance have come out and they've said, look, you know, we've got $1 billion as our, like, you know, our reserve fund. They're trying to set up like an industry standard of reserve funds. And Grayscale, they came out and they were like, actually, no, we're not going to do that. But here he is. Here he is. Go on, boy. Say hello. What are you doing? What are you doing? Yeah, look. Okay, he's just going to stay here then. So yes, they've stopped short of providing the wallet addresses. So Grayscale shared a letter from Coinbase custody attesting that each of Grayscale's crypto product is fully backed. Okay, so obviously Coinbase, they hold the crypto, and they said, oh no, look, you know, Coinbase have said that we have money, just don't look at the money. Okay, I don't want you to see the wallet addresses because I don't want you to know which ones are ours, and you know, I don't want you to track them. That's the only thing I can take away from that. Why would you say, oh yeah, look, we have all the money, but not want people to know what's happening with it and at what time? All right, mate, can you give me 5 minutes, can you? Yeah, I'll give you some chicken later. Okay, see you later. Give drop a like for him. He's such a good boy. Love him so much. Yeah, they cited security concerns. Mate, get down. Get away. Look, as you can see here. So to be clear, the Bitcoin underlying Grayscale Bitcoin Trust are owned by basically GBTC and GBTC alone. Coinbase frequently performs on-chain validations. The only reason, like I said, is that I think these guys might be moving money around to make it look good, knowing when these are going to happen. There's been so many rumors of everybody doing it. Just quickly take a loan or move some money here. I mean, why? When there is so many like scams out here, I don't know why you can't just be anything but like super transparent. Obviously, I mean, it's fine if you don't have the money. Like, I get it. I get that you don't have the money, and I guess I get that you're in trouble. But you can't then go and say it's fine. I don't know. Let me know what you think about this. Drop a little comment here in the chat. Like, do you genuinely believe? I mean, looking at Grayscale, they are ginormous, obviously, and I mean they've slowly been seeing their fund trade at a bit of a discount because of obviously everything that's going on, and no one really wants it. No one wants to get in. No one wants to be buying Bitcoin at these levels. Not until we see a bit of a recovery, because we are looking potentially at a $12,000 Bitcoin. And there's not really too much more to talk about this apart from Genesis. Genesis, not good. And also Gemini, also not good. Really not good, in fact. So Genesis needs $1 billion liquidity injection over the weekend or by today, and Gemini sees significant Bitcoin outflows as fears of insolvency spread throughout the industry. What else? I believe there was something here. Okay, yes, yeah. So GBTC, just to jump back, is trading at a discount of nearly 43% compared to its net asset value, in part due to investor speculation on their exposure to Genesis. And also, don't forget, guys, Gemini actually, I believe it's on here somewhere. I had it here. Let me see this. Gemini. Genesis. Gemini. Give me another one. They stopped trading. Here is it. They have stopped trading. I can't find the article. Maybe this is old. Gemini trading. Why have I got caps on? Why? Let's have a look at this. Yeah, so they got massive, obviously, and then I believe they halted trading at the end of last week. So even that is another situation which there's just massive contagion. I told you it was going to happen. I know that this is a massive issue for the whole industry, but just take your crypto off exchanges, please. Not financial advice. Actually, no, it is financial advice, but it's very generic, and I'm not a qualified financial advisor. And also, I'm not giving it to you specifically because I don't know who you are. So generic financial advice, which is allowed, take your money off exchanges, not your keys, not your crypto, mate. That is the bottom line. I also do want to mention Bitcoin halving cycle. Are we near the bottom? Okay. So as you can see, 26 months between the halving is typically when we get, no, not 20, 26 to 30. So we can see 30 months in, bottom of 2022, maybe? Question mark there. Bottom of 2018, 29, around 29 months. And you can see this here. This is like 1,400 days. And again, halving 1,333 days. And again, halving. The halvings do get longer, or, slightly, but it's all around the same, around the same time. Plus also, consider this. These months get slightly longer. So I wouldn't expect if maybe next month we saw the bottom. I personally do genuinely believe we're going to have a 15K Bitcoin. I reckon quite easily. Again, another source that we're looking at is whenever the Z score fell out of the green channel, the bottom was in for Bitcoin. We're very close. You can see this here. So just kind of falling out, bottom, falling out, bottom, falling out, bottom. Where are we now, boy? We're close. We're close. I reckon we got like a month or two. I reckon we got a month. Yeah. Say a month. Hopefully. I hope a month. I don't know. Maybe a month. I'm pretty sure. I'm gonna say around about a month. Like I genuinely think that we're gonna see probably around February, March, end of Q1, beginning of Q2. This is when all of the cost-saving measures in the stock market is going to, start pumping again. The Fed are going to see inflation continually trend to the downside, and then normal stocks will kind of pick up. Then also everyone's going to start piling into crypto, but only once we've got over this FTX scenario and we do have a little bit of kind of positive feedback from, you know, the government maybe introducing some regulations. This will encourage a lot of institutional money, because everyone's just so scared right now. Like, why am I putting my money with FTX when they can just go bust? Why am I putting my money with anyone when they can just go bust? But anyway, I'm rambling on now, guys. Hit the like button. Subscribe to the channel. Thank you very much for coming. It was fantastic to have you back. I'm going to do a video later on just talking about the general Fed, you know, not, hi, I'm General Fed, but the Fed in general, you know, what is it that they're worried about? Why do they want to stop the wage price spiral? What is that? And how come he wants, you know, the general Fed want everybody to be poor? This is a big question. And how does it relate to crypto? But I'm going to sign off. Thank you very much. Like the video. It's very much appreciated. And it's also free and just helps us out. So thank you very much. Subscribe to the channel and I will see you later.